Let's get over to Leslie Picker. She's been following all of the bank earnings, which is basically J.P. Morgan and Wells Fargo this morning. What are the takeaways?
Move there for Wells Fargo, and that call is still actually ongoing for a little bit longer here. Investors, though, looking through a miss on net interest income in the quarter. That's that profitability metric for loan making because guidance was stable. CFO Mike Santomassimo saying on the earnings call that they're, quote, close to the trough on NII. The idea of the trough was the first question asked on the call, to which CFO Santomassimo replied deposits will be a big factor, but so far they've largely been behaving as they thought. Then there was a follow-up question about the outlook for loan demand.
I think the 50 basis point reduction is helpful, but not by itself a factor that will drive people to borrow or not. I think they'll need to see that come down more meaningfully if that's like the driving force. The uncertainty around the election, the uncertainty around the just macro backdrop. I think as people get more confidence that the baseline case of a soft landing will materialize, you get past the election, you see rates come down a little bit. I think all those things will come together and help give clients more confidence about either building inventories or making further capital expenditures that they're holding off on now.
Santomassimo said there should be more visibility toward the end of the year. NII was also breathlessly discussed on the J.P. Morgan call a little earlier as analysts sought more visibility into 2025. But management reiterated there is still a lot of uncertainty to be factored in.
First of all, next time they should give them the damn number. I don't want to spend all time in these calls like going through what they're guessing what NII is going to be next year. And can I just also point out that NII, all things being equal, is a number, but all things are never equal. And the yield curve, if you have a recession, the effect of the yield curve will be very different than you have continued growth.
Management there said the current market consensus for NII ex markets is $87 billion for 2025, which they think is closer to their internal expectations, but maybe, quote, still a little bit toppy. Sarah.